What's your initial?
It sounds like he's affirming the market stance, and I think that you could stop right there. Just and from that, from the overall look of the headlines that I'm reading here, and obviously what Alon said, it looks like he's emphasizing the negatives and the challenges while acknowledging some of the strengths that are out there. You're shaking your head.
No, naturally the stock market goes from negative to positive because he's emphasizing all the things wrong in the economy.
We can talk about this, Joe, but,
no,
I think the market feels like it's getting a freebie here. I don't think the market really believes in the weakness, and I think it's getting a cut anyway.
And there was the opening, in theory, for him to say, well, trade uncertainty perhaps has abated a little bit because we got past.
No, he didn't say that.
And financial conditions have loosened.
He didn't say that.
Good job.
And global economic weakness is not a bigger problem. Didn't say that.
But then they add another worry, and that's a debt ceiling.
Exactly.
So
yeah, he's been on that one for a while.
You feel better after the jobs number on Friday? No, didn't say that.
Well, he said the labor market remains healthy. It's a nod to these things over here and a kind of stare and a focus on those things over there.
Chris?
Yeah, I would agree. I like the nod and the stare thing. I mean, if you think about the yield curve has been telling us something for a while. Now, people immediately jump to, it's telling us a recession's coming, and the quote is always out there, a recession's always coming if you don't do something about it. So the yield curve in the back end is saying the Fed, if it acts and it pre-acts appropriately, quote unquote, you can get a soft landing. If the Fed doesn't act, and I don't mean save the equity market, if it doesn't right-size the yield curve, they have to do more later. So you have to rebalance the yield curve according to data as it's becoming fluid. And I think this so-called quotes that just came out here before the testimony are saying exactly that. Reemerged. Concerns have reemerged. Continue to weigh on. Those are strong words to suggest that there's the out for a July cut.
Yeah, we should note that the two-year yield, that's one that we're closely watching, 1.86. So we did see an immediate reaction with that, bringing down the dollar index as well.
It also tells you, Melissa, that there was a bit of a looking over your shoulder. Maybe he doesn't give it to us today. Trade in the market, and then that's coming off right now.
Right, exactly.
So, Chris, I would just ask you, I think you and I might be on the same page on this, but where do you think about where we are in the business cycle? And also, I think particularly as it relates to cyclicals versus some of the more growthier stocks.
We just released our mid-year report yesterday, and it's never good to be contrarian just to be contrarian. You could wait a long time for your view to come out, but we're in contrast to what people call the late cycle. We don't think we're in the late cycle. Look what the Fed's about to do. Look where inflation is. Look where earnings and the rest of the world is. There's a dual track economy. The U.S. engine of growth is the U.S. consumer. The rest of the world is manufacturing and trade. And that's why the Fed's in a tough spot. So we think we're early to mid-cycle again because it's the fourth wave. But most people think we're late cycle because we've been doing this for 11 years. Right. So it's not the length, it's about the components of the business cycle. So we think we're back early mid, which is why we're very bullish.
But don't people also think it's late because you do have this inversion of the yield curve, because you have seen some curling over of things like, business and consumer confidence? In other words, not that it's an emergency, but that it looks like it's getting ragged around the edges.
It's a good point, Mike. I think the late cycle ended when the Fed raised rates in December, and it cut it off. And now, with the Fed going back to potentially an easing bias, they could right-size the yield curve. That's why we think we're going back to early mid.
Yeah,
Going back to the point that Joe was making, a quarter-point cut, it's not going to solve most of these problems that Jay Powell outlined in this testimony.
No, I do think that the thing I know about Chairman Powell and Rich Claret and the rest, that they're very practical people. They don't necessarily define themselves in stark economic terms, which is to say they're not Phillips curve people or Keynesians or supply siders. I think they're looking at the yield curve in particular and looking at that and saying, listen, this could be a problem. This could actually back us into a serious issue if we're not careful. And we have to tip our hat to the fact that the conditions, financial conditions, are such that we have to change our policy. I don't think it's going to change economic growth, the trajectory of economic growth.
Yeah. Kind of a nice chart, guys, if you want to take a look at the euro. Which looks to be strengthening against the dollar, and
which poses a problem for the ECB meeting later this month.
It's a big football. Well, actually, it's a football we throw across the Atlantic, turns into a soccer ball somewhere around the Atlantic trench, right in the middle, and then we throw it back, which is who can out sort of appreciate or depreciate their currency. So there's that chart right there. As Melissa said, the two-year yield has fallen 5 basis points. I didn't get a quick look at the 10-year. I need my glasses.
It came in just a bit.
The 10 years
It came in just a bit.
2.05, yeah.
And stocks rallied. I think the focus now, it's a little bit early to say this, but when I think about the data for the rest of the month, it has to outperform an outperformance number. It has to be super, super strong to say to the Fed, what are you guys out of your minds? Because I think the bar is relatively high for them not to cut. So I think the focus goes to what happens later. And now the market, I think, has to start to digest this question. Is it a one and done? Is it an insurance cut? Or is it part of, I think Chris said earlier, an easing cycle? Easing bias, but does it become an easing cycle? I don't know if that's the case.
That's the next shift right there. And I would point to, it's a small data point because it's only one company, but a big German chemical company gave us a lot of warning.
BASF, that was pretty ugly.
Yeah.
That warning.
And that's about what's to come, potentially. So right-sizing the yield curve, staving off what that would be in a collateral way across other industries is probably what the Fed's looking at.
Yeah, you have to wonder if BASF is sort of a taste of what's to come in earnings season. But in terms of the yield curve, you mentioned that the 10-year came off. Has the spread actually increased?
Yeah. I can look that up.
Here.
We also should have a chart in the back on the.
It almost looks like it's
on the spread.
It could take me a second
just to look at it. Whether or not this was actually a steepening thing. And I think Jason's comments on the idea that is an animating factor for the Fed to move is interesting and something that might help the banks and might. Do you have the spread up there?
Yeah.
Might ultimately help.
Yeah, we've steepened a bit.
A little bit. Not really much, but might ultimately help a little bit the economy in terms of. That said, if you want money today,
you can get it.
Oh, yeah.
If you can't get it, you definitely don't deserve it.
Right.
Yeah, I would say you can get it today. You may not be able to get it the same way 6 months from now if you don't right-size the yield curve, because the cost of capital at the front end being higher than the return on capital just a few years out will stop some businesses from saying, I'm going to wait.
Right.
And that feeds on it.
I'll tell you, for stocks, though, it's very hard to be short going into the second half of this year, because you're getting the president's getting a rate cut, and it looks like he's trying to resolve some of the tensions with China. It's almost, kind of you're sticking the landing in terms of what he wanted maybe at the start of the year.